You can count on us like 1, 2, 3, we'll be there. And we know what you need and we are count on me. We will help you with accounting. Let's learn together to achieve our dreams.
Welcome to Account on Me Season 2. I am Gyan Anthony Uga, and together with Gatdula, we will be your study partners for this video. So get ready and let's start accounting. In this chapter, I am going to explain the concept of liabilities, define the two categories of liabilities, and explain the breach of covenants. What is a liability? A liability is a present obligation of an entity to transfer an economic resource as a result of a past event. Liabilities are consequences of past transactions that happened during the operation of the business, na kung saan obligated tayong bayaran ang mga creditor the amount that we owe or mag-render ng services based on the contract. Liabilities also serve as an alternative to equity as a source of companies' financing. This means that we can use loans or borrowings to fund the operation of the business. Next, the essential characteristics of a liability. So a liability has three essential characteristics. First, the entity has a present obligation. Next, the obligation is to transfer an economic resource. And lastly, the liability arises from a past event. So let us discuss the first one. The entity has a present obligation. When we say obligation, it is the duty of an entity that cannot be avoided. An obligation is considered present if it has arisen from a past transaction. For example, if the company borrowed 10,000 pesos from a creditor, then the company now has an obligation to repay the creditor the amount that the company owed. The present obligation can be legal or constructive. Legal obligations originate from a court case or a contract, which is normally a case with accounts payable for goods and services received. Constructive obligations, on the other hand, are liabilities that come from the pattern of normal business practice. For example, an entity practices a policy of refunding customers for all defective products that they have bought. Second characteristic, the obligation is to transfer an economic resource. So what is an economic resource? An economic resource is a factor that is required to accomplish an activity. This resource also produces economic benefits. Examples of economic resources are cash, land, and services. Also, there is no liability if the obligation does not involve payment of money or transfer of a non-cash asset. For instance, there is an accounting liability should the entity declare cash dividend. It is because there is an obligation to pay cash. But there is no accounting liability when an entity declares share dividend because the obligation is to issue the entity's own shares. Lastly, the liability arises from a past event. Past event is an occurrence of a transaction that gives rise to a liability. It is also called the obligating event. For example, if the acquisition of equipment gives rise to accounts payable, the obligating event is the acquisition of equipment. Next topic is about current liabilities. Liabilities are classified as current if first, they are payable within the operating cycle of the entity and 12 months after the reporting period. Operating cycle refers to the length of time required for an entity to purchase inventory and convert it to cash from sales. Its duration is normally 12 months from the start of the operation of the business. Next, a liability is current when the obligation is held by the entity solely for trading purposes. This includes payables that are part of the working capital used in the operating cycle of the business, which are the trade and other payables, accruals for employees, and other operating costs. Lastly, the entity is not allowed to defer payment of liability for 12 months at the end of the reporting period. Liabilities that do not have the right to postpone the payment beyond 12 months after the reporting period will still be considered short-term obligations. Examples of liabilities are trade and other payables, short-term debt, current portion of long-term debt, and current tax liability. Measurement of current liabilities. In measuring current liabilities, the amount is not discounted but measured and reported at face amount. This refers to the total value of the liability after maturity. The next topic is about non-current liabilities. So non-current liabilities are obligations that are not required to be settled during the operating cycle of the business. These are basically the liabilities that are not classified as current. Also, these are the long-term obligations of the entity which are not due within 12 months after the reporting period of the entity. Examples of non-current liabilities are non-current portion of the long-term debt, long-term deferred revenue, deferred tax liability, and long-term lease liability. Measurement of non-current liabilities. First, bonds payable and non-interest-bearing notes payable are initially measured at present value and subsequently measured at amortized cost. Present value is a concept wherein an amount of money today is not worth more than that same amount of money in the future. That means that the value of money in the future is not worth as much as an equal amount received today. Amortized cost will be discussed in the later chapter. Next, if the long-term note payable is interest-bearing, it is measured at face amount or total value after maturity. Now, we are going to discuss covenants. Covenants are the agreements with the investor whenever an entity enters into a contract. This usually relates to the terms of a financial contract, such as a loan document stating the limits at which the borrower can lend. Covenants are restrictions on the borrower's ability to take out more loans, distribute dividends, and maintain specific amount of working capital. Covenants are also legally binding statements, which, if violated, will result in a number of consequences. Breach of covenants. Just like what was discussed earlier, covenants are the obligations of multiple parties that state how each party should perform, where if breach will trigger compensatory or legal action. So let's assume that a covenant was violated by an entity. The liability that the entity incurred will be payable on demand because according to the Philippine accounting standards, as a consequence of the breach, the liability is current even if the lender agreed after the reporting period not to demand payment. However, if the lender agreed before the reporting period to provide a grace period of 12 months after the reporting period, the liability will be considered non-current. In this scenario, grace period is a period during which the lender cannot demand immediate payment.
Let's move forward to the presentation of current liabilities. Under paragraph 54 of PAS 1, the phase of the statement of financial position shall include the following line items for current liabilities. Trade and other payables, current provisions, short-term borrowing, current portion of long-term debt, and current tax liability. The trade and other payables include the accounts we used to know, such as the accounts payable, notes payable, accrued interest on note payable, dividends payable, and accrued expenses. Now, let's discuss some other accounts that is interconnected with liabilities. First, estimated liabilities. What are these? These are obligations that exist at the end of the reporting period, although their amount is not definite. Meaning to say, there is a liability or an obligation, but hindi natin alam kung magkano nga ba yung exact amount ng babayaran natin. And in some cases din, bukod sa hindi alam kung magkano yung exact amount, hindi rin alam ng entity kung sino nga ba yung babayaran. But the existence of estimated liabilities is valid and unquestioned. Why? Because may liability talaga tayo. Ang hindi lang natin sure is kung sino nga ba yung babayaran and the exact amount of the liability. Next, let's discuss deferred revenue. Deferred revenue is also known as unearned revenue.
This means the income is already received but not yet earned. Nakakuha na ng income, nakakuha na ng bayad, pero hindi pa niya na-earn or hindi pa siya nakakapagbigay ng service or hindi pa siya nakakapagbigay ng goods. So, this deferred revenue is realizable within 1 year and more than 1 year. Kapag within 1 year, it is classified as current liability. If it is more than 1 year, it is classified as non-current liability. And nasa screen nyo yung other examples of current liabilities of deferred revenue and non-current deferred revenue. Next, bonus. So what is bonus? It is a compensation given to key officers and employees for superior income realized during the year. Hindi ito yung bonus na natatanggap natin for 13-month pay. Hindi rin ito yung bonus na binibigay ni teacher tuwing may exam. But this bonus is a compensation given by an entity sa kanilang mga employees. Bakit ba sila nagbibigay? Kasi halimbawa, meron silang agreement to their employees that kung na-achieve nila ang isang requirement ng isang entity or nakapag-perform sila during the year ng mas mataas pa sa expectation ng entity, binibigyan yun ng bonus. So what is the purpose of this bonus? It is to motivate officers and employees to strive harder para mas maging productive pa sila sa business, which will benefit them and the entity. And this bonus is recorded as liability in the entity. Kadalasan, current liability siya kasi hindi na dapat pinapatagal itong bonus. Now, this bonus has 4 variations. First is the bonus is expressed as a certain percent of income before bonus and before tax. Bonus is expressed as a certain percent of income after bonus but before tax. Bonus is expressed as a certain percent of income after bonus and after tax. And lastly, the fourth variation, bonus is expressed as a certain percent of income before bonus but after tax. Now, itong 4 variations, this tackles on how to compute the bonus. So, dito, nagbigay ako ng mga formulas. Itong formula na ito, galing ito kay Sir Win sa YouTube channel niya. So, these are algebraic equation. First, paano ba naging B is equals to percent times NI? So, B is represented by bonus. Percent represented by bonus. Percentage of bonus yan. And NI is represented by net income. Tapos, sa ibang formula natin, meron din tayong mapapansin na T. Yung T na yon is yung tax. Next, sa unang variation, kaya siya naging B is equals dahil sa ating algebra kung natatandaan natin, bonus is, ibig sabihin ng is equals. Thus, B is equals to, B is expressed as a certain percent. Now, yung bonus daw, part siya of what? Of the income. Kaya, B is equals to percentage of bonus times net income. Ngayon, paano natin isasama si before bonus and before tax? Dito, ang mahalagang tandaan lang natin para mas madali nating makuha ang computation sa bonus is yung word na before and after. Ibig sabihin kasi ng before, ibabawas yung bonus before. So, bago pa. Kaya, hindi na yun isasama sa ating formula. Kapag after naman, after mo computein lahat yun, saka mo isasama yung bonus. Kaya, kasama siya sa formula. And this, after na word, represents deduction. Kaya, kung mapapansin natin sa next variation natin, number 2, bonus is expressed as a certain percent of income after bonus. That's why there is a deduction of bonus dun sa NI minus B. But before tax, again, bakit hindi natin sinama yung tax? Dahil before yung word. Ibig sabihin, hindi i-compute yung bonus bago yung tax. And for our third variation, after bonus and after tax. That's why there is a deduction of the bonus and tax in the net income bago natin makuha yung bonus. Ngayon, si T, bakit kasama si T? Bakit kasama si tax? Kasi, di ba sa pagko-compute natin ng net income, palaging iniisip natin na yung income natin is subject to tax. That's why merong tax dito. And yung tax is equals to percent times NI or net income minus bonus. Itong percentage sa tax, ano ba yon? Yun ba yung percentage of bonus? Hindi. Itong percent na nire-represent sa T is equals to percent is yung income tax rate na meron tayo. Mamaya, mas malilinawan pa tayo tungkol dito sa formula kapag may illustration na tayo. And lastly, bonus is expressed as a certain percent of income before bonus but after tax. Before bonus, kaya hindi siya ide-deduct. After tax, kaya ide-deduct. Kasi after means deduction nga. So, NI minus T. And again, yung T is equals to percent or income tax rate times net income minus bonus. Okay, so here is an illustration for bonus. So, ang ating given, income before bonus and before tax is 5,250,000. So, ito yung magiging net income natin. Bonus, yung bonus percentage niya is 5%. And yung income tax rate na meron tayo, 25%. So, for our 4 variations, ito din yung given na gagamitin natin. So, una, illustration about income before bonus and before tax. Ang ating formula, B is equals to percent of bonus times net income. So, ano bang percent of bonus natin? 5% ang binigay ng entity sa isang employee. And yung net income, halimbawa ng entity is 5,250,000. Now, what is the meaning of this? 5% times 5,250,000, we will get 262,500 pesos. So, yung bonus na makukuha ng isang employee kapag ang agreement nila ng entity ay income before bonus and before tax, 262,500 pesos. Second variation, bonus expressed as a certain percent of income after bonus but before tax. Ang ating formula, B is equals to percentage ng ating bonus times net income minus bonus. So, 5% times 5,250,000 minus B kasi deduction nga yun. So, ang una natin gagawin, i-multiply natin yung 5% sa 5,250,000. Ang makukuha natin, 262,500 pesos. Less 0.05B. Bakit nagkaroon ng 0.05B? 5% times B or 1. Ang makukuha natin ay 0.05. Kasi kung maalala natin sa algebra natin dati, kapag bilang yung nire-represent, ang value nun ay 1. So, 1 times 5% is equals to 0.05B. Now, bakit nagkaroon ng transferring? Kasi sa math din natin, para makuha natin yung value ni B, ita-transfer natin yung value niya from this side to the other side. So, kapag negative 0.05 siya sa kabilang side, kapag inilipat siya, magiging positive. So, B plus 0.05B is equals to 262,000 pesos. Now, B plus 0.05. Katulad ng sabi ko kanina, B is represented by a value of 1. Thus, 1 plus 0.05 is equals to 1.05. Now, ita-transfer lang uli natin siya to get the value of the B. And we will arrive with 250,000 pesos. Okay, for our third illustration, bonus is expressed as a certain percent of income after bonus and after tax. Dito, medyo mahaba-haba yung computation natin kasi parehong ide-deduct muna yung bonus and yung tax bago natin makompute yung bonus na ibibigay sa employee. Now, our formula, B is equals to percent ng bonus times net income minus B minus T. So, exchange, palit-palit lang. 5% times 5,250,000 minus B minus 0.25 times 5,250,000 minus B. So natin nakuha si 0.25. Si 0.25 is yung income tax rate natin. Kasi kung babalikan natin yung given natin, T is equals to percent. Ang percent uli na yon ay yung income tax rate natin. 25% siya. Kaya 0.25. Kinonvert lang natin 25% to decimal. Ngayon, multiply lang uli. 5 times 5,250,000, 262,500 less 0.05B kasi 5% times 1. Next, 5% times 1,312,000 times 5,250,000, 1,312,500, tapos 5% times B uli, 0.25. Yon, exchange lang ng mga numbers hanggang sa mag-transfer tayo ng ating value of the P. So, magiging 1.0375 B is equals to 262,500 minus 65,625, and we will come up with the bonus of 189,759.0361 or 189,759 pesos. Ngayon, ang nakompute pa lang natin is yung bonus. Ngayon, paano natin makukuha yung sa tax? Sa tax natin, exchange lang ulit, 25% yung income tax rate times 5,250,000 for our net income less yung B na nakuha na natin, yung na-compute natin, which is 189,759.0361. Sa ibang book, ang ginawa nila is 189,759 pesos na agad. Kumbaga, yung round off na yung nilagay nila. Pero sa akin, to avoid confusion, sinama ko pa rin yung decimal place for our bonus. And hanggang sa mag-come up tayo sa tax is equals to 1,265,060 pesos, 241 pesos. Now, for our last variation, income before bonus but after tax. Katulad lang din to ng kanina, pero hindi natin isasama sa deduction yung ating makukuhang bonus. Ngayon, B is equals to percentage of bonus times net income minus T. 5% times 5,250,000 less 0.25 or yung income tax rate nga natin times 5,250,000 minus B. Now, 5 times 5,250,000 is equals to 262,000 minus 1,312,500 times 5% is equals to 65,625 plus 0.25 times 5% is equals to 0.0125B. Now, magta-transfer lang ulit tayo to get our value of B. 0.9875B yung makukuha natin pag pinag-add na yon or pinag-minus equals to 262,000 minus 500 minus 65,625. Ang makukuha natin ay 196,875 divided by 0.9875. And ang makukuha na bonus ng isang employee kapag ang usapan nila ng entity is income before bonus but after tax is 199,367 pesos. Now, let's compute for our tax. Sa tax naman natin, ganun lang uli. T is equals to 25% or 0.25 times 5,250,000 minus yung na-compute nating bonus na yun, which is 199,367 pesos, 0.0886. And we will come up with the tax of 1,262,658. Now, kung mapapansin nyo, in our 4 variations of bonus, from the start until the 4th variation, pababa ng pababa yung bonus na makukuha ng isang employee. Why? Or bakit pinakamataas yung sa una? Kasi sa unang variation natin, ang computation ng ating bonus ay yung mismong net income times bonus lang natin. Yun lang yun, kasi hindi na natin ibabawas yung bonus doon and yung tax. That's why, mas malaki talaga yung bonus na makukuha niya. Compared in other variations of bonus wherein, yung mismong net income ng entity is mababawasan pa. mababawasan pa siya ng bonus or ng tax or pareho bago natin i-compute yun, yung base natin sa percentage of bonus, which is yung 5%. Kaya mas mababa talaga yung makukuha niya. Kaya kung ako yung tatanungin mo, kung makikipag-agree ako sa isang entity, ang gusto ko talagang magiging ang variation of bonus ko is yung net income before bonus and before tax. Kasi mas malaki yung bonus na makukuha ko. Ayan, medyo naging mahaba-haba yung discussion natin for the computation of bonus, but I hope nakakasunod pa rin ang lahat. Now, let's move forward to the journal entry for bonus liability. As what I said earlier, yung bonus liability natin is magiging current liability ng entity. Why? Kasi dapat hindi na natin pinapatagal tong bonus na ibinibigay sa isang employee. So, for our journal entry, we will debit bonus expense and credit bonus payable. So, kapag naman na-release na yung liability na yun or nabayaran na yung obligation na yun, vice versa lang. I-reverse lang natin itong ating entry. Ayan. So, ngayon, let's move forward to our last topic, which is refundable deposits. So, what are these? These are consist of cash or property received from customers but are refundable after compliance of certain conditions. So, in refundable deposits, we will have an account which is containers deposit account, and it is classified as current liability. So, ano ba muna yung refundable deposit? Itong refundable deposit, ang magiging best example natin dito is sa mga tindahan, sa mga palengke. For example, bumili ako ng RC. Tapos, yung tindera, yung seller, nagkaroon kami ng agreement na magkakaroon ako ng deposit na 100 pesos para sa mga bote ng RC or yung container mismo. So, ayun, refundable deposit yon. Why? Kasi kapag binalik ko yung container or yung mismong bote, may babalik sa akin yung 100 ko. But, if I didn't give it back to the entity, sa kanila na din mismo yung 100 pesos. And itong refundable deposit or containers deposit account, current liability siya kasi dapat hindi na to pinapatagal pa ng isang entity or ng customer. Kasi kung halimbawa tapos niya nang gamitin yung container, wala na siyang use dun. So, it's safe na ibalik niya na yun para makuha niya na din yung dineposit niyang pera. As what I've said earlier, if the customer returns the container, deposit is simply refunded. I-refund lang siya. But if not, yung deposit na binigay, which is yung 100 pesos ko, it will be considered as the sale price of the containers. So, kapag merong excess yung deposit over the cost, it will be considered as a gain. So, let's have an illustration about this refundable deposit. A deposit of 10,000 is required from the customer for returnable containers. The containers cost 8,000 pesos. So, dito, yung cost natin, or yung mismong cost ng container is 8,000 pesos. Pero, pinag-deposit siya nung entity ng 10,000 pesos. So, this will have a journal entry of debit cash for 10,000 pesos and containers deposit for 10,000 pesos. And I think that's it. I hope you've learned something from me and Mr. Gyan about liabilities, or your knowledge about liabilities expanded. Thank you for watching and listening. See you on our next video. Bye!
Let's learn together to achieve our dreams.